Today's conveyancing clients expect speed, clarity, and frequent updates. But tight margins and rising client expectations put pressure on conveyancing practices. With smart automation and clear workflows, Leap helps conveyancing teams spend less time on admin and more time supporting their clients. Learn more at leap.co.uk.
You're listening to the Today's Conveyancer podcast, the leading source of information for residential property lawyers in England and Wales. Don't forget to subscribe and sign up to our free newsletter at todaysconveyancer.co.uk. You can also follow us on LinkedIn and Twitter.
Hello, welcome along to the latest Today's Conveyancer podcast. It's our final one before we break for the summer. And I'm delighted to welcome Rob Gurney and Ben Robinson on, who are here to talk about the latest Landmark Property Trends report. For those of you who haven't listened to this podcast before, you guys, you've got some insight into the market that you can share that comes from Landmark's own data. And specifically, we're looking at things like listings, sold subject to contract, search order volume, completion volumes, and getting a real feel for where the market is. We're midpoint in 2026, so it's a good time to take stock and reflect. Great to have you both on the podcast. Thank you so much for joining. Ben, in the first instance, I think probably best to start with, where are we in terms of how the estate agency market is feeling and that pipeline as we lead up to conveyances?
Yeah, thanks, David. I think general sentiment is one of uncertainty and concern. And I think if you look at the listing numbers, which have remained relatively high over the last couple of years, despite uncertainty driven by a number of factors, including rental reforms, driving sort of landlords to sell up and increasing that sort of available stock. Actually, we saw over the quarter be about 1% down in terms of listings to the market, but that was a decreasing picture, with June being 3% down. And I think, you know, that's obviously been magnified by what's going on in the world, because this goes through from April to June, and people putting off decisions. Sellers, of course, are in intent to move, and they tend not to do that so much when the world's not in a great place, and that's the start of the pipe. So we're seeing a little bit of drop off there, and I think that's also reflective of fewer sales, eventually starting to impact sellers as well. They see a lot of stock on, a lot of for sale boards, not many sold boards. They'll often put off, or wait till summer, wait till a bit more certainty, wait for this. I think finally to that is a lot of, because the rental reform changes are through now, a lot of the people who were going to put on the market have put on the market, so we've probably seen a dearth of that. I think then there's a lot of sitting stock, hence putting new sales off potentially, and that means price pressure, because sales, although I'm not about stealing too much of Rob's thunder, from the agency's view, sales improved through the quarter, sales agreed. I think that's because a lot of prices have adjusted to a more realistic position, and interest rates are holding relatively flat. It's still particularly low, considering the amount of stock that's on there. So, you know, agents make money when they sell and complete. What we're finding from agents is that those sales, lower sales, lots of stock to manage, lots of empty rental stock, which actually could be quite hard to move, because sometimes it's not in great condition, and landlords don't always have the same financial incentive to drop the price when you try and move it through. And actually, where interest rates and inflation come in, that sort of mid to higher rather than very higher end of the market struggling a little bit as well in terms of flowing through. And that's leaving agents worried, because future cash flows, battening down the hatches, looking to digitize. And I think, also really trying to preciously protect their pipelines, but in protracted timescales, as we have, and we all know, following government reform announcement, hopefully that will force things to change. But at the moment we are where we are. That means, especially where there's choice, a lot of buyer negotiation. So that takes time. It's a burden again, and means much more likely that it'll fall through and you're trying to pull things together. So there's just lots going on at the moment that isn't particularly positive, albeit coming towards the end of the quarter, at least it did look like people were starting to commit to purchases again.
We've got listings at a broadly in line with the same numbers as last year. So it doesn't feel as though we have a supply problem particularly. It feels like you say, Ben, there's much more of there are more demand pressures than there are supply pressures.
Absolutely, because we've still got loads of stock, and it's still pretty good numbers, even though it dropped in June. For unlike post-COVID, where agents were scrapping to get anything because they were selling things off market. Right now, they're just trying to get the right things that will sell and be realistic with sellers, and find buyers and hold sales together. Complete dynamic shift, and it's a lot of time spent grinding for much less income, which is not great for anybody.
Mm-hmm. The flow through then for conveyancing, Rob, is a bit of a mixed picture then.
Yeah, it is. I mean, we'll start with the less positive news, which is, over the quarter compared to the quarter of last year, lawyer instructions were down 7% across that quarter. But to put a bit of a positive spin on it, that situation varies from which month you look at, and if you look at the trend is actually a positive one. So just to sort of break that down, April we were 10% below where we were in April 25. It was 7% in May, and then only 4% down in June versus June 25. And in actual fact, the June numbers, in real terms as well as compared to last year, June is the highest month that we've seen for new lawyer instructions in this calendar year so far. So yes, we're down, but it's looking like, well, certainly from April all the way up to the end of June, it looked like a sort of a slightly improving position, and that's obviously something that we'll cling on to. I think why we started 10% down in April versus April 25 has kind of as much to do with the situation back in 25 as it does, current market dynamics. If you remember rightly, April was the first month after the SDLT stampede, and yes, it had a massive impact on completion numbers, but I actually think there was a little bit of impact on new cases starting as well. I think April had a bit of a boost in terms of new cases because literally everyone was focusing on the completion aspect in the month prior to that. So there was possibly a bit of pent up new instructions coming through that perhaps meant that it's kind of showed the 10% gap from this April to last. But like I say, overall a relatively improving position, albeit one that's down on last year. But the completion numbers and analysis are a completely different story when we look at quarter two versus 25 quarter two, because that quarter volumes in that 3-month period were 23% up in terms of completions. But when you break it down month by month, April was 50% higher. May 14% higher, and June 6% higher. And I think before we all start slapping each other on the back and popping a champagne corks, we have to understand why that is, because certainly we're not seeing a huge resurgence in completions running up to this summer. It's more obviously when we look at the context of where we were last year versus this, and as we know, and I've already mentioned, the stampede in March meant that there were basically nothing left on the table in April to complete. So that's why we're seeing a 50% improvement from April to April. And then also it's worth mentioning the fact that that situation didn't resolve itself all in 1 month, and it's taken the entire quarter of 25 to kind of recover because of the immature pipeline that was created by the SDLT spike. So I would say, it's great that numbers are so much higher than they were this time last year, but it's not because of an improved market in the last 3 months. It's purely down to what happened last year.
Therein is the difficulty between making comparisons with previous years. People may remember that the baseline for this report was 2019, a couple of years ago. It's now the previous year. But I mean, that's market dynamics for you, isn't it? What's the view on sentiment and data telling you about coming into the summer, which traditionally you sort of start to see a bit of that summer slowdown before we get that pickup in September? Do you think we've got that coming down the track?
I think there will be a bit of an uptick, but I don't think it's going to be particularly significant. Basically, we know how long conveyancing transactions take on average from instruction to completion. So our current instruction numbers and the numbers that I've just quoted for this quarter will obviously have a bearing on what we see in the next 2 to 3 months. So unfortunately, I don't think it's going to be like a huge bumper summer because simply the cases aren't there to make it that way.
It used to be the case that you could track market momentum through the year. We knew that from January we sort of had this steady uplift, and then it sort of come down again and then back up again. You had this wave through the year. Is that gone? I mean, have we had too many government incentives and too many interventions to be able to kind of see that over the past few years? The dynamics of the market change, the length of time it takes to actually transact property, or do you think we'll ever get back to that sort of traditional curve?
I'm sure Ben has a view as well, but I would say that they're definitely blurred. I think it's a lot less predictable than it used to be. I mean, we always have the Christmas is always at the end of December, right? So we always know that December is going to be a quiet month, and then you hopefully see a bit of a bounce in the new year. And traditionally people tend to like to move in the summer, when kids are on holiday, that kind of stuff. But I'd say it's because of the current economic situation, and obviously wars and stuff like that don't help. It's very, very difficult to kind of predict what's going to happen and how big the peaks and the troughs are going to be. And as you know, conveyancing gets killed as soon as we start seeing those peaks and troughs, because it's incredibly difficult to manage pipelines when from a resourcing perspective when they vary so greatly.
Well, I think conveyancers may well be looking at the current conditions and saying, actually, we're okay here. We're getting numbers through the door. We're getting completions through the door. We can manage these workloads reasonably well. And of course, with the technology evolution kind of coming down the road as well, they may even have time to actually look into that and effect that in their business. Whereas when they're constantly operating with peaks and troughs, you're firefighting the whole time.
Funnily enough, you're absolutely right, and we often talk about the completion to instruction ratio on this podcast, don't we? And actually, for the last 6 months, not just this last quarter, there's been significantly less variance in that number between instructions and completions, and that lack of variation does create an element of calmness in terms of the predictability of the conveyancing pipeline. And if it's predictable and it's resourced correctly, then you're absolutely right. It's much easier to handle the throughput of cases, and also, as you say, start looking ahead to what might be available in the market going forward to make things easier and more efficient. When we're scrambling either because we're too busy or not busy enough, those circumstances don't lend themselves to that kind of thinking.
We make a lot of the resourcing issue in conveyancing. I mean, equally, Ben, estate agents have got the same sorts of issues, presumably.
Yeah, and I think the same sort of sentiment, to be honest. I think although, there's the general seasonal pattern still, as Rob said, it comes up from January and does come up to spring for them in listings, because listings then sell. And as you say, people move in the summer and we normally get a bump. Every time there's news of the extreme kind, I think access to information doesn't necessarily help with that, because everything's extreme. There is an immediate reaction or response that the agents have to deal with, and that's then a few weeks of quiet phone lines, panicking that we haven't got anything at the start, and fighting for every sale or price reduction, and then suddenly people get used to it. And I think people are becoming a bit more immune because there's so much information that they're just sort of carrying on now at a level, and I think agents can manage that, but they're seeing their pipelines have deteriorated and they're less certain, so that means less money coming down the track. And I think that's their future worry. So what we're seeing in response to that is, yes, the time to look at options, the time to spend time thinking, well, how do we make that pipeline more secure and more certain, faster? How do we obviously adjust the business to be more digital, because we've got the tools to do that? Because if we don't at these levels, we're going to struggle. And the problem is now these levels have been pretty similar for a while outside of SDLT, and certainly since the mini budget, we've not really seen any exceptional peaks for estate agents. So now's the time to change. And I think with obviously the recent announcements on potential legislative reforms to help that happen more quickly, the majority have been pretty positive in their response to that, because they know that one of the biggest pains for them is the uncertainty of income down the line. And in lower transaction times, that's even more painful. Whereas perhaps, again, post-COVID, when you're selling everything you've got and you've got a huge pipeline, you don't notice that it's falling through so much because you're getting enough money to cover the costs anyway. It's always when the bottom line's not there that you're really focusing and saying, well, what's going wrong here? So there's an appetite, even outside of legislative reform, to make sure that everything that comes through is treated like gold dust and gets through to a conclusion. So yeah, I think there's very similar challenges, but a chance to look at how they improve, and then the market comes back and you make more money from everything you do is the hope.
The elephant in the room with all of this is whether we get a Burnham bounce. I'm not going to ask you to predict that. When we reconvene in 3 months' time, perhaps we can see whether there's any evidence of that. But as ever, great to have you both on the podcast and sharing your insight. It's a slightly shortened version of the podcast, isn't it? This episode, and we will see what happens over the course of the next few months.
Yeah, it'd be interesting. Thanks, David.
Thank you.
The Today's Conveyancer podcast is available on your preferred podcast provider. It's also available on todaysconveyancer.co.uk. My thanks to Ben and to Rob. Thank you as ever for listening, and we'll see you again soon.
You're listening to the Today's Conveyancer podcast, the leading source of information for residential property lawyers in England and Wales. Don't forget to subscribe and sign up to our free newsletter at todaysconveyancer.co.uk. You can also follow us on LinkedIn and Twitter.